Cisco slid 7% after the bell today, and it happened after posting the biggest revenue quarter in company history. Tonight, Cisco's margin miss, Linde's streak breaks, a Supreme Court pause on Apple, a $12.5 billion Lakers deal, and Google's Pixel 11. Cisco's fourth quarter fiscal 2026 revenue hit a record $17.3 billion, the biggest single quarter the company has ever printed. That was up 18% year over year, clearing the $16.82 billion consensus with room to spare. Non-GAAP earnings per share came in at $1.22, above the $1.17 street estimate, another beat. So why did the stock drop 7% after the bell? One line explains it: gross margin. Non-GAAP gross margin fell to 66.3%, down 210 basis points from 68.4% a year earlier. Then the guidance stung. Q1 fiscal 2027 gross margin was guided at just 65% to 66%. Investors are reading that as the AI networking boom arriving with a real cost squeeze attached to it. In other words, revenue is showing up, but it is carrying lower incremental profit than the market had modeled. For a stock whose recent multiple was built on AI narrative expansion, that gap is a warning shot. Linde also disappointed after the bell. The industrial gas giant's shares fell roughly 5% on the print. Second quarter sales rose 9.3% to $9.29 billion, up from $8.5 billion a year ago. That is real top-line growth after 3 straight years of a flat top line. But the story that carried the stock through the drought, margin expansion, just paused. Reported operating margin slipped to 27.49%, from 27.71% a year earlier. Remember the run: margins added 191 basis points in 2024 and another 129 in 2025. That streak ended this quarter, and for a stock priced on compounding margins, that matters a lot. In Washington, Justice Elena Kagan hit pause on the Apple App Store fee fight. She issued a one-day administrative stay on August 12, briefly freezing the whole proceeding. The California District Court had been pressing Apple to submit a proposed fee for developer linkout purchases. The financial context: Apple has collected zero fees on external purchases since April of 2025. That is when Judge Gonzalez Rogers held Apple in civil contempt for imposing a 27% commission on linkout transactions. The Supreme Court has agreed to hear the contempt case in its October term. So the entire App Store linkout fee model is now waiting on the calendar. Every quarter this drags on is another quarter Apple cannot monetize external app purchases at all. Meta said Thursday it has deactivated 756,000 Australian accounts through June of 2026. All of them were users the company believes were under Australia's minimum age for social media. But here is the wrinkle: 2/3 of those accounts were already gone by January. That was before Australia's online safety regulator publicly said the effort was not good enough. Translation: the pace of teen removals appears to be slowing, not accelerating, into the second half. And regulators in the EU and UK are watching the exact same age enforcement question closely. Quick hit: Bob Iger and Thrive Capital's Joshua Kushner have agreed to buy Mark Walters' controlling stake in the LA Lakers. The price is a $12.5 billion valuation, a record for any U.S. sports franchise. The deal is pending NBA Board of Governors approval, but the number itself resets franchise valuation NAV. Google launched the Pixel 11 lineup on August 12, and every model runs $100 pricier than last year. Inside is the Tensor G6, built on TSMC's 2nm process, Google's most advanced chip yet. Google says that delivers 50% more TPU compute for faster, more power-efficient on-device Gemini AI. What to watch at tomorrow's open: whether Cisco's margin miss ripples across networking peers and the wider AI hardware complex. For the full breakdown, visit LineVestnews.com and subscribe to LineVest Daily for the story before the open.